Welcome back, everyone. This is our looking at the charts report for the 23rd of September. Today, we will be looking into four instruments. First is EURUSD, second is GBPUSD, third is EURCHF, and fourth is WTI. Enjoy the report. We make a start with EURUSD for our chart. At the moment, the currency pair is returning upwards from a notable test to lower grounds just at the S2 116.85 support. The price action has gradually climbed higher, surpassing the S1 117.05 support and even aimed at the R1 117.35 resistance, but was unable to clearly test its strength. However, the R1 remains the most probable level to be met first if the bulls are to take over. Above that, the next stop for the currency pair could be the R2 117.55, which was briefly tested on the 22nd of September, forming this week's high. At the top, the R3 117.73 resistance represents our top level for EURUSD, which could interest the bulls in a prolonged upward momentum scenario. In case the bears take control, the S1 117.05 or even lower, the S2 116.85 levels, as mentioned before, could be used as guidance for further selling. At the base of our chart, the S3 116.65 level can be used as a final support that was accurately tested various times on the 20th of August and has not been tested since. The RSI indicator below our chart remains just above the 30 level, indicating the bearish trend formed in the past days. The selling momentum we tend to keep as the currency pair's current trend is also characterized by the downward trend line on our chart. In the following days, traders can focus on the German IFO data for September coming up on the 24th, the Eurozone's consumer confidence final reading for September on the 29th, the employment report from Germany and the Eurozone on the 30th, along with the German preliminary inflation data on the same day. From the USD perspective, we note the US consumer confidence for September on the 28th, the final GDP rate for the second quarter, and the weekly initial jobless claims figure, both out on the 30th of September. Our next choice is GBPUSD for our chart. Most of the price action in the past days has been between our R1 136.80 resistance and our S2 136.05 support. And in between them, we tend to note the S1 136.05 support, which can be used as an indication that the bears are still in control. However, a possible breach above the R1 could signal an even greater upward momentum towards the R2 137.25 line, or even higher, the R3 137.55 resistance. From our point of view, a clear breach above the R1 could be evidence of a trend reversal, implying the buyers have taken over. At the moment, the 100 moving average is moving downwards away from the 200 one, as indicated on our chart, pointing out the recent sell-off for the pound was intense. This is also confirmed with our RSI indicator, which at some point stabilized along the 30 level, yet seems to have rebounded higher in the most recent sessions. In the next days, pound traders can focus on the GDP rates for the second quarter coming up on the 30th of September. The USD data has already been mentioned previously, and cable traders should keep an eye on them also. Next, we go with EUROCHF for our chart. Currently, the pair seems to be stable between the R1 108.65 resistance and the S1 108.05 support. However, during the start of September until the 17th, the currency pair had moved upward in consecutive sessions and had peaked on the R2 109.35, which remains the highest level reached since the 7th of July. In case of a sell-off, EURCHF could fall below the S1 108.05, indicating a new monthly low and possibly making the way for the S2 107.40 support to come into play. Another considerable level lower for the currency pair remains the S3 107, which was last seen in the last stage of August. The average true range indicator below our chart remains considerably higher, just at the 0.0021, which can be used as an indication of a higher probability for trend alteration. As noted, the pair is currently moving sideways, but in our opinion, some bullish tendencies may also exist. In the following days, please consider the European economic data pre-mentioned, while from the CHF side, we get the KOF indicator for September on the 30th of the month. Finally, we close with WTI for our chart. WTI has been in an upward momentum in the past days and has come up from testing all our support levels to reaching just below the R1 72.75 resistance. The trend is also displayed by our RSI indicator below our chart, which moved towards the 70 level, confirming the strength of the decisive move. Above the R1, we tend to make a case for the R2 73.90 resistance to come into play, while at the top, the R3 74.85 level can also be attended, as these levels have been revisited in July. In terms of a possible selling trend, the S1 71.35 support is our first line noted, while even lower the S2 70.10 stands out in our opinion, as it has been tested various times in the past days and seems to hold up and remain relevant. At the moment, we keep a sideways motion bias for the commodities price just between the R1 72.75 resistance and the S1 71.35 support. These levels can determine further price action if breached upwards or downwards accordingly. In the next days, traders could watch out for the API weekly crude oil stocks figure on the 28th of September and the EIA crude oil stockpiles figure for the 29th. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. From everyone here at IronFX, wishes for solid trading.